So I wasn't planning on doing a video this week so quick, but I did want to update as to what the channel had done or what my investment had done on this channel, the YouTube brokerage account. So let's get right into it. Okay, here we are. I had purchased T. Rowe Price Blue Chip. If you remember from my second video, I was a little hesitant about buying this one because the has a new manager since October. The Morningstar ratings have since dropped. But I did want to go over, I did decide to buy this stock, and this mutual fund. I wanted to go over exactly what happened when I bought this. You notice I'm down 6 cents. So as I explained in the last video, the second video, T. Rowe Price, the mutual fund, you find out at about 8 o'clock the night you buy it what the settling price for the fund is, because all of the underlying stocks have to be calculated, and then they calculate how that affects the final price of the stock. So I had put in a purchase of $100 of T. Rowe Price. Well, that came out to 559 shares, a little over half a share, and I lost 6 cents. Well, if the stock's up 0.5%, how did I lose 6 cents? Well, they round down to the fourth digit, 559 whatever, and you multiply that by the price, and that's what it's worth. Now, I would have thought, and what I would like to see them do is, well, then they should have just charged me $99.94, but I put the purchase price at $100. I wanted to buy $100, and I only got $9.94 because of the rounding. Cost me 6 cents. This is the most it's ever cost me, although this is also the smallest amount I've ever tried to pay. Usually I buy $1,000 or more at a time, so it's like a penny instead of the full 6 cents. So that's what happened with this stock. I'm in it. Not my favorite choice because of the manager change and the Morningstar rating drop, but most of the underlying stocks in the... Okay, so when I say I bought more, I didn't mean that I bought more T. Rowe Price. I bought Loudus. Now, if you remember from my second video, it was my intention to buy $50 worth of T. Rowe Price and $50 worth of Loudus. Because there's a $100 minimum on these things, I went with a $100 into T. Rowe Price. And because T. Rowe Price dropped that 5%, I wanted to still pick up Loudus. It's one of my favorite mutual funds to buy. For the same reason T. Rowe Price is. They have a lot of the same underlying stocks anyways. So here you see I put in another purchase of $100. Now typically for dollar cost averaging, I would have waited till the first trading day of February to make another trade, but because this had dropped, the tech stocks had dropped, specifically T. Rowe Price 5%, it seemed like a good dip to buy. Now looking back in hindsight, it's still falling, but that's okay. I will continue to watch the markets, and I will take part of this cash and wiggle it into the market, either on the first trading day of the month, or if I see an opportunity like I saw on this day, I will jump in with another $100 on another fund that I like. So here we see the stock, the mutual fund this day dropped 0.07%, but I was able to get $100 worth of shares. It didn't cost me anything. And this is a 4-star rated as opposed to the 3-star rated on Morningstar. I look at other things besides Morningstar, but that's just a good place to start. In the link below, I will put some of the people, the channels here on YouTube that I like to listen to. They give very good fundamental analysis. I disagree with them on some points, and maybe in time I will do videos about where I disagree with their analysis, specifically in China. There's a lot of talk about Alibaba in China right now. I do not believe that China is investable, and we will talk about that at some point. Well, the stock market is down this week. When we're hitting highs and record highs like we did Monday, it's to be expected that there are corrections. Nothing fundamentally has changed about the economy in the last month anyway, since Omicron hit. So that's why I'm dollar cost averaging into these mutual funds. I could be picking stocks, and I do in my other accounts, but again, starting out with just $1,000, what would I do? These mutual funds are professionally managed. They do charge a little bit of a fee for that, like 1%, but they're a good way to start. I'm not afraid of ETFs. Probably will be picking up an ETF here not too long from now. Just depends, we looked at that in the first or second video. I guess it was the second video. And, it was cost prohibitive. If I'm wanting to put dollar cost average in just $1,000, I can't spend $500 for a position in a ETF. If this fund grows big enough, or if there are contributions to it, I can look at that. But for now, I'm stuck with either individual stocks at a certain dollar amount, which I don't want to do. That's too risky if I only have $1,000. Or the best one is mutual funds. So if you like this video, subscribe, like it down below. Check out the link to my other videos, as well as the links I'm going to add to other YouTubers that I listen to for their analysis. Some are dividend investors, some are value investors. Myself, I look for the greatest return personally, but as I'm getting closer to retirement or close to retirement, I'm finding myself going more and more to dividend stocks, the very, very large blue chip companies, not just large growth, but specifically ones that pay dividends. That's me personally. We can talk more about that in future videos, but hope you have a great day, Happy New Year, and good luck in your investing.